So in this video, we will see many charts going up into the right. Specifically, we are going to look at AI, NVidia, and the Kardashev scale. And the main idea is to basically examine whether we are in an AI bubble or whether it can go on or will go on. And of course, I mean, all of this involves the future, which is uncertain inherently. So this is not financial advice. It is just like my own view on the future. Okay, so let's dive right into it. The first principles that are like underlying all of the assumptions in this talk is the AI scaling law. And the AI scaling law basically says that the more compute we throw at a problem, i.e. the larger the data sizes and the larger the AI model complexity or the number of parameters in the AI model, the better the performance of the AI model, and it keeps improving. So if you throw more compute and more data and more parameters on a certain problem, then we will see smaller loss, right, on the y-axis. And you need to be aware that this is like a log-log plot, and we have a straight line in a log-log plot, which means we have a power law at hand. So a power law usually indicates that we need to throw, say, much more compute at this problem. So for instance, here we have a between those two ticks we have a 100x in compute. So in terms of the number of days to train this model. And also we see like going from this tick to this tick is like a 10x in data set size, and going from this tick to this tick is like again 100x in the number of parameters we use for our model training. So what we know for sure is that we will have like multiple orders of magnitude larger models and more compute in the future, right? And why do we know this? Because the loss keeps improving, and we still have to deploy AI in the real world, and we have reached performance, like superhuman performance, in many specific application scenarios. Chess would be a trivial example, but also say in driving in certain cities, the full self-driving system is actually also better than the average human. And we have seen, like, for example, in lawyer tests, medicine tests, and so on, specific medicine problems, we have seen AI outperforming humans. So basically deploying humans is like the most expensive thing you can do for a problem, right? Human resources are very expensive. We need to not only we need to pay them on an hourly basis a lot, we also need to train them for a decade or so, right? And so which is like very inefficient in terms of monetary spending. So if an AI is able to outperform a human here on the y-axis, then it basically warrants a lot more training, right? It warrants like this. We will see, and we are currently seeing more and more AI applications where we use AIs instead of humans, and we don't go back. For instance, like I'm in the content business. I have been for 10 years, and I have hired like at the peak maybe 12 freelancers or so, creating content for Finxter. But now I not even only avoid hiring freelancers, I also avoid writing content in the first place, right? Because people are just going to ChatGPT asking the questions there, and this is great. I mean, it's bad for content creators who depend on the income generated from their content. But it's good for humanity. It's good for you and me, for the consumers, right? We get more and more knowledge for very little money, and we don't even need expensive human resources as an intermediary. So this is happening. For instance, here we see James Doma on FSD scaling laws. Here this tweet, he says, an interesting aspect of FSD, so full self-driving, Tesla's full self-driving functionality, is the applicability of scaling laws. So this should let Tesla predict the performance of an FSD implementation ahead of time. Scaling laws in neural networks are stable relationships between the performance of a neural network and its size. training data size and total training compute. One way they are useful in the development of big neural network projects is that they provide a way to know what results you are going to get before you go to the considerable time and expense involved in building and training a major system. Elon Musk has actually replied that this is garbage in, garbage out, right? But he was like a bit angry because James Daumer was comparing the FSD with the ChatGPT moment. But anyways, we see these kind of scaling properties, right, in many neural networks applications. So we know if you just throw, say, 100x more compute at it, we might see a constant improvement in this log space. Sorry, in this log space, we see a constant percentage improvement. And of course, constant percentage improvement in log space might mean like an significant improvement in terms of loss. And we want this, right? We want our full self-driving system to generate less and less errors. We actually want for every year, say if a robot taxi or a self-driving car, and I drive this self-driving car, I have like first-hand experience. If you have the self-driving car, you actually want the accident rate to go down. There will be an accident rate, right? But you want the accident rate to be 10 times, even 100 times smaller than human accident rate in order to save lives. And the scaling laws here suggest that we just need to throw more exaflops, more compute at this. And we see it like evidently in reality. We see how Tesla scales up its compute to a 100 exaflop cluster, which is like similar to 300,000 A100 GPUs. Which is like currently Tesla, like the full self-driving system is one of the largest AI applications in the world. So it's not like NVidia that actually sells the infrastructure. They actually use the infrastructure, right? They use the GPUs, the compute to create an application that will be very profitable, the full self-driving system. And it's already is profitable for Tesla. So the TLDR here is that we see the scaling. So we know the scaling law. We see that big AI application companies, such as the full self-driving system, the robotaxi network of Tesla and others, actually scale up compute in reality. We also see the demand for inference, distributed inference, growing exponentially. Is it like maybe it's polynomial here? It's not very sure here from this graph whether it's growing like a power law or it's growing exponentially, but it's growing significantly at an accelerated rate, right? So we see that we have like nearly 200 million miles driven since inception. So we see more and more. In reality, we need to do more and more AI inference on the devices themselves. So the total compute demand of humanity is growing rapidly. And we also see it like for NVIDIA can now actually has, here in blue you see Moore's law in the trillions of operations per second on the y-axis and the time axis on the x-axis. Time axis is not logarithmic, it's like a linear axis, whereas the y-axis is an logarithmic axis, which means that if you have a straight line here, it means exponential growth. And you see how Moore's law, how CPU performance actually flattens off, right? So we see the exponential growth has actually stopped with CPU performance, but GPU acceleration helps. It has even outstripped the growth of the Moore's law, and we see the slope of the curve is faster, is higher. So we basically grow exponentially. We keep growing exponentially with GPUs. We roughly have a 2x per year and 1000x in 10 years. So 2 to the power of 10 is like 1000x. So we see like 1000x in the last 10 years in terms of compute, accelerated compute demand, and then also like provisioning, right? And so supply of the compute, which is done by NVIDIA. So that's why. So 1000x in 10 years. So this is like the compute that NVIDIA has delivered to the world, right? 1000x in 10 years. But 1000x doesn't mean they have 1000x their revenue, right? Because the cost per compute also drops. So they have managed to 15x their revenue in 10 years, moving basically from mostly gaming to mostly data center revenue, from 4 billion annualized revenue to 60 billion, which is like a 15x. So we see like 1000x in compute and 15x in revenue. So revenue didn't grow as fast as compute. So cost per compute also drops, which is like a good thing, right? So we see more and more applications are getting unlocked because of this, because it's getting cheaper and cheaper and cheaper per compute unit. So a certain application staying at the same type of performance or remaining with the same performance gets exponentially cheaper, which is a great thing for the consumer, and it actually unlocks the economic viability of many AI applications that weren't economically viable before. So here you see like very quickly the data center revenue growing at a 5-year compound annual growth rate of 75%, which is like insane, right? So imagine what this means, 75% growth rate. It's like faster compound annual growth rate than the best asset in history, Bitcoin, in terms of monetary performance. NVidia has even outstripped this. Why is that? Because they sell AI training systems or data centers. They say AI factories, AI data centers that basically produce intelligence or intelligent tokens. So the output of such an AI factory, of such a data center, is trained tokens. It's like intelligence, right? They produce raw intelligence that can be used then for AI applications such as full self-driving, humanoid robots, automation, and so on. And here again, you see in the y-axis we have a logarithmic plot of the training compute in petaflops, and we see like how the models basically have increased significantly, like exponentially grown in terms of model size. They have put this green line here, but actually if you look at the dots, it doesn't look like a line to me. It looks like somehow flattening out in a way, right? Because you could also have shown like a curve, something like this. I think a curve would be even a better fit than a line here. So maybe it's not growing like at an exponential rate, the compute per the compute needed for training AI models, but it is still growing significantly, right? I would say it's growing at least polynomially, so like a power law. Good. So if all this data has shown us one thing, then it is that we are in a transformational phase where every single year we will have more and more compute demand in the world. So we need to create data centers, build more data centers. This is what NVIDIA offers here, right? They bet their company on this. And the data centers need electricity. And another report from EPRI has shown that we can expect soon, like in 6 years or so, that data center electricity in the US would be like 15% of the US electricity consumption. So currently the US consumes like 4,000 terawatt hours of electricity per year. And currently data centers use up maybe 150 terawatt hours per year. So something on those lines, right? And you see recently how it has grown with this beginning exponential fashion, right? It is even like you could imagine that the growth has been, because this is mainly driven by AI, right? In the last 2-3 years. So you can imagine the AI curve actually has been growing exponentially already for a decade, but it has not shown up because initially the absolute numbers were just too small. But now it's starting to show up, and you see like this exponential curve, this exponential pushing up the data center growth. And actually EPRI I think is too bearish in terms of, or bearish I mean, or too optimistic maybe in a way. If you think this is a negative issue, I don't think this is a negative. So I think they are too bearish in terms of energy consumption. They like their absolute like worst case scenario for them would be that in 2030, so in 6 years, data centers will be like 15% of the energy consumption in the US. But I think, I mean, if you look at the data points, I think it might be even much higher, right? It might be like 50% or so. It might actually expand the need for the US or other countries that want to be competitive. We see like this accelerated demand for electricity, and I think the bearish use case, these use cases, I think these are just too unrealistic. I mean, the curve won't look like this. This I can almost guarantee. So we won't see like a 5% moderate growth rate until 2030. We might see like even have a 40% or so of the US electricity demand going to data centers, to AI training, to train AIs. Here we see why this might not be such a bad thing. Generally, you can like plot the countries. On the y-axis, we have the electric power consumption, kilowatt hours per capita, so per person, and we have the income per capita, and we see like the more there's a strict correlation. The more electric power we consume, the higher the income, or the higher the income, the more electricity we consume, which would also make sense, right? So in a way, it's like a correlation, not a causation. There might be a causal relationship, but we don't actually know. But what we know is that there is no single country that has like a high income, very high income, but very low electric power consumption. It doesn't seem to be possible, right? We have many different variants of countries trying out different societal organization forms, but none of them has managed to create a high income per capita using a low electric power consumption. Similarly, we have not seen a country that has very low income but has a high electric power consumption. Of course, they could not afford it, right? They could not simply afford that. They cannot afford the electrical energy. It would be too expensive for them because they have low income. So obviously this one cannot exist, right? Because they don't have the income. But this one could exist. They have the income. So if you have a high income, you could also consume a low amount of energy. But it is theoretically possible, but it doesn't seem to exist in the real world, right? So there seems to be like kind of a correlation. And generally, there might be something to this point of view. If you point of view from Kardashev, which was like a researcher from the 60s or so, a Soviet researcher, who actually gave us a method to measure a civilization's level of technological advancement in 1964, right? It's based on the amount of energy a civilization is able to harness and utilize. It is a hypothetical scale, but it puts energy consumption in a cosmetic perspective and helps us understand how advanced we may become as a civilization. So currently we are at a type 1 civilization. We are actually able to harness all or most of the planet's energy from the parent star, the sun, right? So we have control over entire planet's natural forces, such as volcanoes and the weather and stuff, right? So we have not even reached like type 1. We are pre-type 1 civilization. Type 2 civilizations, type 3 civilizations would then utilize much more of the energy. So for instance, they would harness, using a Dyson sphere or so, they would harness most of the energy or a lot of the energy of the sun, of the solar system, right? Maybe 0.5 of the energy or so. So yeah, because the sun emits a lot of energy into the universe, right? It is not harnessed actually, and only a small portion of the sun's energy actually goes to Earth. So and we only use a small portion of that energy as humanity, right? So historically, if you look, I mean, this might sound a bit futuristic, but if you look at the big picture, like going from 1800 to 2020 or so, you see this boom, this exponential curve, or power law curve, I'm not really sure, in terms of energy consumption. So we see a huge increase in energy. This curve looks like a first grade exponential growth curve, and there would be no reason to assume that we stop here, right? I mean, similarly, if you would have, say, only that part of the curve, if somebody would show you that part, you might also, I mean, some people would say, okay, the growth, we have reached peak growth or so, right? We will flatten off, but there was nothing like flattening up. The curve was simply growing and keep growing, and probably the same will happen here. So if you project future humanity energy consumption, this is not my projections, I found it online, so there are some papers and so on that project it. If you just zoom out, go back like again a few hundred years, so here we have from 1800 to 2000, so 200 something years. Here we have like 400 years. We look at 400 years growth curve. We might see like the most of the energy would come from nuclear or renewable energy sources, maybe new energy sources that we have not even harnessed yet. But from a first principles basis, right, most of the energy comes from the sun, and so the energy is emitted by the sun. Of course, we have like the nuclear energy in atoms and stuff, so which we could also harness, but this energy probably also comes from the sun, or maybe not. I mean, it doesn't really matter for the argument. But the general argument is that if you zoom out long enough, you see that the energy use is just exploding. We are in the middle of such an explosion of energy use, and it won't stop no matter how much we want it. Like many people today are arguing for saving energy and stuff, and I'm totally not in this camp anymore. I was, but I'm not in this camp. I think we will harness more and more energy. You just need to zoom out, look at the big picture. This is just an emergent property of our complex system called humanity, called Earth, and you see like how we harness more and more energy historically, and how we will use more and more energy, and we will find more efficient ways to do it in the future. Good. Looking at this, now let's have some first principles reasoning. We barely started to shift from human to AI society. AI is real, we already use it every day. We see its power, we see its ability to outperform humans in many ways. So currently we are at a 0.7 on a Kardashev scale, so we have not even reached type 1. Type 1 in civilization, planetary, so we are kind of here in this evolutionary process. We have reached 0.7, so we harness 0.7 of the annual energy emitted by the sun, and it would be reasonable for me to assume that more than 0.7 will go to AI. Why not? It's like a way to scale up AI. So currently we are at 0.035 on the Kardashev scale. To power all the data centers, and this even powers data centers like for the internet and using videos and storing our photos and stuff, right? But it will be like, even we will see a 20x from here, so we will double our world's energy consumption if we want to push us, humanity, forward on the Kardashev scale to a type 1 civilization and beyond. And if we want to do this, we will basically use AI, and AI will eventually outnumber humanity, right? This is just like it is also, recently we had a video like Elon Musk and so on. He proposed that we will have one humanoid robot per person on the Earth, and I definitely believe so. I think we will have many AIs per person in the world. We will have a situation where the robots and AI agents outnumber humanity in terms of intelligence. So collectively, AI will be much more intelligent than humanity, and on a Kardashev scale, the power consumption for AI will be bigger than the power consumption for humanity, right? Just watch Matrix if you don't believe me. Good. So what is still to do to reach this? I mean, if you believe in this kind of future, it is not sure. Of course, futuristic. Nobody knows the future. But if this, like, if you, on a first principles basis, believe that AI will reach more than 0.7 on the Kardashev scale, so that we collectively as humanity reach and cross type 1 civilization, we would still have to do some things, right? For instance, if you look at the human brain, we have 1,000 trillion synapses in the human brain. So it's like one quadrillion synapses in the brain. 1,000 trillion, or 1 million times billion synapses, times 8 billion brains, because we are 8 billion humans, right? So this is like the collective processing capability or compute power of humanity. It's a huge number, and AI is still like it's a miniature number. So the currently largest AI models have like 1 trillion weights or so, and these seem to be huge already, right? But we would have to do a 1000x in the number of weights to even reach human level brain complexity. So a 1000x in terms of the weight seems insane, right? So we have 1000x, but look at the initial chart I gave you, the first AI scaling laws. We see like a 1000x would be just one tick on this bar. So we have a 100x in compute here, right? And parameters here, we have a 100x in parameters. So if you have another 100x and another 10x, then we would reach this point. So it is definitely very viable, arguing from this kind of graphic or from this perspective. It is definitely possible to have another 1000x in order just to create one AGI, like one artificial general intelligence, or one AI that has the same number of weights as one human brain. And then of course we need to scale it up by 8 billion. So in total we have like a 8 trillion x in weight to reach actually human general intelligence. So we have all models combined will be like an 8 trillion x from here on. So this is a scale up in terms of weights we need. This doesn't mean that the energy usage will scale up by 8 trillion x, but it does mean that it will scale up by significant factor, right? At least say 10x would be very, very, very conservative, even if we reach many breakthroughs in AI research to represent these models more efficiently. 10x would be probably too optimistic. Probably it will be much, much higher than 10x in terms of energy use. And even if cost per compute sorry about that, drop significantly, we will still see a huge increase in revenue need for those type of systems. So no, the TLDR no, I don't think that, from arguing from first principles, I don't think that AI is overhyped in any way. Considering the historic significance, considering charts like this with the historic energy consumption, considering the future that will be like reaching a type 1 civilization, considering the future energy demands, considering the scaling laws, considering the huge AI applications with trillions of dollars of unlock for the GDP, like the Tesla FSD factor, considering the humanoid robotics, considering the AI scaling laws, all of this indicate that we are just at the beginning of the AI revolution and not at the end, right? But there are some bottlenecks, and this is basically also what I wanted to deliver in this talk. The bottlenecks are potential bottlenecks is money, right? So currently we are still searching for viable AI business models that are not, and AI business models, they are currently not well established business models. It's similar to the internet in the early days, where advertisement was not like this big business model it is now. Internet basically today powers the advertisement today powers the internet. It pays for almost everything in the internet. More and more we have subscription now, right, as an AI business model, subscription revenue, for instance OpenAI and others. But it's very difficult for subscription revenue. Probably we might have some API usage kind of revenue. This is a good business model, but we are just experimenting and testing it out, right? Testing out different business models. We are still in search for business models that fit to an AI first world. And this experimentation inherently has some volatility built in, right? Because sometimes we might find worse or better. Sometimes we might find wrong paths, and we need to reconsider the paths we have chosen. And if a company does it, it might fail, and the company might crash, and so on. So there is inherent volatility in terms of money, right? And money could become a bottleneck. So why should I invest money, my money, like as Facebook, as Meta, why should I purchase NVidia GPUs if I don't see a very clear return on investment? And I might not see it, right? I might not see initially the return on investment. I might spend a lot on GPUs and then users just use my language model for free. Other companies monetize it with some subscription revenue, but it doesn't cover the expenses, the direct expenses paid for by Meta. And if Meta realizes this, then they don't spend any money anymore, and there is some volatility. They stop spending on AI, and we see an intermediary drop in revenue, for instance. This could always happen, and it has happened in the internet, and it will happen for AI as well. And also, like, another bottleneck that might happen is that generally we need time to build data centers, roughly 2 years. So we are at this point in time, we are limited by our foresight 2 years ago. If 2 years ago we didn't see the need for more data centers for some reason, we cannot use them today because we didn't build them. So we are kind of limited by our vision. And sometimes we have a shorter term vision as humanity collectively, maybe in a crisis, maybe in some kind of liquidity event or so, like COVID. We might be limited to think 2 years ahead. And if you don't think 2 years ahead, if you don't invest time, money, effort, energy, resources in building data centers, then there will be bottlenecks. Then 2 years might pass and we didn't make any progress towards our Kardashev scale, towards our scaling up of intelligence, right? And so, which would mean that there would be inherent volatility, and many AI businesses would drop in their revenue, their valuation would drop. Many people would lose a lot of money that have invested in those companies, even though, like, investing in Amazon was very profitable, but there were times where you lost like 90% of your money, right? And energy as well, we need to scale up the energy production. It also takes time. We have a strain on centralized energy grid, so we need to transition towards a decentralized grid where we can just use the resources that we create in a decentralized fashion, right? So as a data center, you might have solar cells on the roof, and you might use the solar cells. You might scale up and down computational training as you have more or less resources. But we need to build these kind of things. We need to become more independent of the centralized energy grid in order to accomplish this. So all of this takes time, and any of those factors could become a bottleneck. Skilled labor shortage. Eventually we will have humanoid bots and stuff, right, that can build those things, but still we need to scale up AI by a significant margin. So the path to go there would take some time, and it would require us to actually use human labor first to build those data centers, to build those factories and stuff. And there are supply chain constraints. Just the global economy is complicated, and many bottlenecks could happen. So what we can expect is significant volatility, and this is actually what I want. So I am bullish in a way, like I'm very bullish in terms of this kind of scale, Kardashev scale and stuff. So we see the future will be a 100x. We can have a 100x in anything, right? We can have we can see a 1000x, 10,000x of some investments and stuff. We see significant improvement in the quality of life for all of us. We will all it will be the present today will look like mid-ages for people, say 20 years from now or 30 years from now. But going there, or even 10 years from now, right? It's like we will have an exponential progress in everything, but going there will be volatile. So there's no straight line from here to there, right? So the only company, or one of the few companies currently making huge profits, is NVidia. NVidia is like an infrastructure company, right? They sell the training hardware currently, and they are paid partially by investors expecting future cash flows, as I already said, Meta and stuff, but also like startups who train their own models, who expect future cash flows, but who might not get the future cash flows. It's like for if you invest in disrupting an industry, for instance, you might create your model disrupting the industry, but the model might not monetize everything of the value you create, right? If you disrupt an industry, if you kill, so for instance, ChatGPT kills 100 industries, it kills maybe the livelihood of 1 million content creators, but they monetize only a portion of it. So they don't get all the revenue of the 1 million content creators. They only get a small portion of the revenue, because otherwise we could have just paid the content creators. It would be like more efficient for humanity to pay the content creator, but it is not. Otherwise, ChatGPT wouldn't win. Otherwise, business owners wouldn't decide to hire ChatGPT instead of the content creator. So ChatGPT is like a 10x, an order of magnitude, maybe a 100x less expensive. So business owner hire ChatGPT over content creators. So which means content creators don't get the revenue anymore, and OpenAI only gets a portion of the revenue that previously went to content creators, and businesses still compete. So the prices of the products go down by an order of magnitude as well. They compete to the margin, right? So they won't have, like, the businesses won't just have a 10x in profit because they have to pay less for the product. Companies will compete with each other and maybe have the same profit margin, and just the companies that don't use AI will get out of business. So a profitable business, so we might see only one profitable business instead of hundreds, right? The collective profits are much smaller, which is good for humanity, good for you and me as consumers, but bad for many businesses, bad for many people who currently have a job, bad for like many portions of the supply chain, and there's volatility inherent, so some might go bankrupt. Eventually it will be good for humanity because we drop unnecessary work that can be automated. It was always good for humanity to, for instance, drop or remove, delete work from the society that was that could be automated or that could be deleted, right? Like horse maintenance or something. Yeah? So we have removed this from society after moving to vehicles, to combustion engine vehicles, on the agrarian sector, or I don't know, translators and stuff. So we remove more and more work from society by automating it and giving it to AI, which is great for society overall, but it inherently has volatility built in, right? So as an example, let's have an example for NVidia. NVidia, that's very simplified to the PE ratio, price earning ratio. So if NVIDIA makes $1, what is per share, what does a share sell for? Maybe $20, so you need 20 years to get your initial investment back. So the PE ratio basically went from 21 in 2019 to 76 in 24. So we have expansion of the PE ratio, which means every dollar in profit now is more expensive than it was in 2019. Similarly, we have the earnings expansion going from 2.4 billion in 2019 to 42 billion in 2024. So if you want to calculate the overall valuation for NVIDIA based on this, you would calculate 21 times 2.4 billion in 2019. So it's like a $40 billion company in 2019. And today you would calculate the value as 76 times 42 billion, right? Which is like this $3 trillion giant $3 trillion giant, yes, $3,000 billion giant we see NVIDIA is today. But there could be some temporary phase, like volatility, like we have seen 2 or 3 years ago, right, with NVIDIA, where we see it's like this fluctuation, this market fluctuation, up and down, up and down, up and down, going from higher lows and higher highs. Sorry about that. Essentially, always growing, but growing with volatility. We might see a compression going from the earnings might go from 42 billion today to only 15 billion for a year or two, right? With some recession and everything. It might easily happen, going from 42 billion to 15 billion and then up to 100 billion or so. And the PE ratio in this case, if the earning would drop, the PE ratio might get hit as well. And you see it's like a multiplicative effect. If the earnings drop, we have a lower valuation because of the earnings drop, but we also get a lower PE ratio because now the market doesn't expect it to grow anymore. So the PE ratio of 76 is only as high because the market expects that NVIDIA will keep growing, and it would only be justified if NVIDIA actually can maintain its growth. But if they can't, if there's some fluctuation temporarily, then the market would just assign it a 20x multiple or so, even a 30 multiple. So the market cap might go from 3.2 trillion to 0.32 trillion, which is like, if you calculate it, 21 times 15 billion is 0.32 trillion. So which would be like almost the market cap, half of the market cap of Tesla. So NVIDIA could like have this 90% drop in share price temporarily until scaling up to and going to the next level, right? This would absolutely be normal. And if you don't need the money for 10 years, then it might be a good idea, because it's also not sure that this will happen, right? It could also go directly to 10x of that. I mean, we just don't know in between. We might be confident on our assumption that the overall revenue will 10x from here in, say, 10 years or so, right? Using this first principles argumentation, like in this presentation with the Kardashev scale and everything. So we might be pretty confident, or we might want to bet on this 10x in revenue in 10 years. But in the intermediate time frame, we might drop first and then go up again. And I've seen this many times in many markets, many industries. We all have seen it. And it was very normal for companies such as Amazon and stuff to have these kind of phases. So there might be some drop in share price, which might then be good opportunity to purchase more stock if you still believe on the overall story. But I think we should be careful. We should not bet the farm on this NVIDIA thing. If you need the money in the midterm, say in 5 years or so, it might be very, very risky to put like a large portion of our net worth into NVIDIA, because it could have dropped. It's like, if you need it for sure in 5 years, it might be at this point, right? It might be a 70%, 60% drop. So we should only put money there that we can safely let it sit there for 10 years or so, right? Because of this multiplicative effect of temporarily reduced earnings might also reduce the PE ratio, or will very likely also reduce the PE ratio. So we have two factors in a multiplicative equation, two factors both reducing, which has this multiplicative effect of significantly reducing. That's why those companies that with high potential are also as volatile, because it is very hard to predict the path. There's a lot of path dependency, right? So nothing goes up in a straight line. This is as a warning. This is the NVIDIA share price, and something like this could be absolutely happening, right? And we should always be aware of this. Okay, thanks for watching this video. I hope you had some fun with the charts and the Kardashev scale and AI and everything. If you want to be on the right side of change and join our free Finxter newsletter, go to finxter.com, finxter.com, and put in your email and join it. You can also check out our courses. These are like premium courses where you can download course certificate as PDFs to certify your AI engineering skills to future employers and freelancing clients. Just check it out. Go to academy.finxter.com. And yeah, thanks for watching. I appreciate having you here. If you like this video, give me a like, subscribe to the channel, and see you in the next video. Bye.